Get ready for the news that is shaking up real estate markets. Berkeley just gave landlords a massive break, with officials interpreting the vacancy tax law in a way that significantly reduces the financial burden on owners of empty apartment buildings. We dive into how Berkeley officials handled the vacancy tax and what this means for property owners across the city.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, we look at a major legal battle unfolding in a state appellate court concerning the Berkeley vacancy tax. We'll explore the legal fight involving property owners who feel they have been unfairly charged, and see how this case could impact the future enforcement of Berkeley's housing tax. Then we shift gears to the world of enterprise technology. Netomi, Inc. has just secured an enormous $110 million funding round to push its agentic artificial intelligence platform deeper into customer service operations. Find out how this new AI technology is set to redefine how large companies handle customer interactions across chat, email, and voice channels. And finally, we look at the massive move in the AI space. Netomi has raised $110 million to embed agentic AI directly into enterprise customer service, promising unprecedented consistency and intelligence. Don't miss out on the future of customer experience. Stay with us for the full story. Berkeley officials have granted significant tax relief to landlords facing vacancy charges under the city's new vacant housing tax, sparking criticism over the interpretation of the law. Landlords of 2 empty apartment buildings were set to owe nearly $1.4 million over 2 years, but officials applied a provision exempting properties recently made uninhabitable by a disaster, effectively shielding them from the charges. This interpretation, which the city claims was necessary to provide sufficient notice of the new tax, has resulted in the city foregoing an estimated $1.35 million in potential revenue for those specific properties in 2024 and 2025. The vacancy tax, approved by voters in 2022 and effective in 2024, imposes charges of $3,000 to $6,000 per unit for housing vacant for at least half a calendar year, with charges doubling for a second year of vacancy. Berkeley identified an unoccupied 51-unit building at 2057 University Ave as having the most vacancies in 2024, leading to a $306,000 bill for its owner, Hanumantla Raj Reddy. Similarly, the Chandler building, vacant since 2015, faced a $144,000 charge. Crucially, the city's interpretation allows exemptions for units made uninhabitable by a fire or natural disaster for a 2-year period following the event. Despite the disasters occurring more than 2 years prior to the tax's implementation, the city manager and finance division applied the exclusion period starting in 2024, regardless of the disaster date. Former council member Kate Harrison and Rent Board Chair Soli Alpert criticized this decision, calling it a very generous standard that cost the city substantial potential revenue, arguing that funds could have been used to prevent job cuts. Landlord Greg Hoff contested the decision, arguing that applying the exclusion retroactively was illegal and that the 2-year timeline was unfair given the time required for renovation permits. The city spokesperson defended the approach as necessary for tax notification. Meanwhile, other property owners have reportedly defaulted on payments totaling over $1.5 million last year, as a legal challenge to Berkeley's vacancy tax is proceeding in a state appellate court. The city has collected approximately $404,000 from first-year charges, falling short of revenue projections. Legal uncertainty remains a major factor. A case challenging a similar tax in San Francisco is before the California First District Court of Appeal, and a ruling in that case could jeopardize Berkeley's tax enforcement. Despite the legal ambiguity, supporters of the tax argue it is successfully pushing housing back onto the market, and proponents predict that the current legal exclusions will eventually expire, making the tax more effective. Outstanding tax revenues remain over $1.5 million as of March, with unpaid bills accruing late penalties and interest. A significant lawsuit has been filed against the owner of a 7-Eleven store in Eugene following an alleged assault. A man with cerebral palsy is suing the store owner, claiming he was assaulted by employees at the location in July 2025. The lawsuit has been valued at $1.5 million. The case is currently active in Eugene. The Trump administration has reportedly frozen $91 million in Minnesota Medicaid funds. This significant action has raised concerns regarding the financial stability of Medicaid services in the state. Details surrounding the decision and its immediate impact on beneficiaries are still emerging as the situation develops. Further updates are expected as authorities clarify the scope and rationale behind this freeze. Enterprise customer experience platform provider Netomi Inc. has secured $110 million in new funding to significantly expand its agentic artificial intelligence platform and accelerate its deployment within regulated, high-volume enterprise environments. Founded in 2016 and formerly known as MSG AI, Netomi offers an agentic AI platform designed to manage customer interactions across chat, email, and voice channels. The core innovation of Netomi's platform lies in its ability to combine deterministic controls with probabilistic reasoning. This architecture allows enterprises to establish strict guardrails defining what an AI agent can and cannot perform, while simultaneously enabling flexible reasoning across complex customer queries. The company claims this approach has resulted in a track record of 0 failures, 0 broken guardrails, and 0 brand violations in deployments, addressing key governance and compliance hurdles that have historically slowed agentic AI adoption at large corporations. Built on a microservices architecture engineered for concurrent load, the system features a multi-layer observability stack that provides real-time logging and auditing of agent decisions. Netomi positions its technology not as a replacement for human agents, but as an integration layer designed to work alongside them within existing customer service workflows. The platform aims to embed AI directly into the digital experience, analyzing customer journeys in real time to resolve issues before they escalate into support tickets. Netomi boasts a strong client roster, including major entities such as Delta Airlines Inc., United Airlines Holdings Inc., MetLife Inc., Paramount Skydance Corp., DraftKings Inc., the National Basketball Association, and Ingram Micro Holding Corp. The funding round was spearheaded by Accenture Ventures, with participation from Adobe Ventures, WNDR Co., SLW, NAVER Ventures, Metis Strategy, and Fin Capital. Accenture Song Chief Executive Ndidi Ode highlighted the strategic importance of the technology, stating, "Agentic AI is opening an entirely new chapter for customer experience, one where brands can respond with greater empathy, consistency, and intelligence at every touchpoint." Netomi's platform doesn't just make service faster, it strengthens the connection between people and the brands they trust. Netomi founder and CEO, Puneet Mehta, emphasized the company's evolution beyond simple conversational interfaces. He described the vision as moving toward a world model for customer experience, where AI is embedded directly within digital products rather than merely layered on top as a chatbot. Mehta believes conversation should only surface when an edge case or complex decision necessitates it.